Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Manifest your true intentions. Regardless of what language you speak, your intent will be manifested through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials up 152, NASDAQ up 12, S&P's up 12. Percentage-wise, what you have out here, folks, is that you have the Dow up 0.6%, NASDAQ up 0.2%, S&P's up 0.4%. Inside the Dow Industrials, the strength out here today, point-wise, is that good old Goldman. Goldman was putting 24 positive points. Big Blue followed up again today, 22 positive points. 3M 21, Caterpillar 14. We go into the gold contract. What do you have with gold? Gold contract out here, folks. Caught a bid even after your downdraft from the jobs number this morning. We closed out at 1323.80. You've done huge amounts of volume out here. We're talking 349,000 contracts. Bottom line is that what you have is that what you can expect is that gold contract is going to be going right after its September 8th swing low. We're not that far away from it now. The 1365.80 is the number. Big number. 10-year note. Same setup, man. Just pretty amazing. Same setup. What I mean specifically is that it rejected lower price once again. Finished out at 123.20. You only had 1 million contracts. That also wants higher price, lower yield. If we take a look at the yield right now, you're at 2.45. That is at the higher end for the last year. There's no doubt. The low's 2. The high is 2.62. King dollar is going after its swing low. That swing low that we're talking about in King dollar is 90.990. Right now, you're at 91.605. And I expect, more than likely, the way this is trading, it looks like it's going to go after it tomorrow. Now, we have frost right across this country in a huge way. It's actually even going to get colder. The snow just finished up in the Northeast. They had quite a storm up there. Natural gas. This is about as deviant as you can get, folks. So, natural gas is down 4.4% today, trading $2.87. And that's $2.87, folks, per million British thermal units, BTUs, okay? So check this out. This is what this story's about. This is, like, phenomenal, actually. Because I was reading this a couple days ago, and I really didn't understand how this could work. And what it was is that the price of natural gas in Boston 2 days ago was 6 times more expensive than what natural gas is trading in the futures market. Well, guess what? That's nothing compared to what I'm going to read to you right now, because this is like insanity. So, natural gas in the United States soared, get this, folks, 60-fold among icy squeeze in the Northeast. Okay? So check this out. This has got up across the country. I suspect we'll find out whether it's in the Midwest. It's definitely in the Northeast. If you're watching Tiger TV, I have natural gas futures up at $2.87. If you actually try to buy them, okay, guess what it's going to cost in the Northeast? $175 per BTU versus $2.87. Here's the story. Spot prices used to fuel heat homes, generate power, reached a record $175 per BTU in New York, according to Consolidated Edison. That's a far cry from the U.S. futures market at 2.93. Other major trading hubs in New York and New England saw prices exceed $100, according to folks in those markets. Even if the rally cools later Thursday as the storm is lambasting New York and Boston, moves off to the north, price in the region probably will close in the triple digits. Here's a quote from the director of natural gas trade at Con Edison. This string of cold has stressed the market just as much as the polar vortex did in 2014. The cold weather cyclone swirling off in Nantucket Island grounded thousands of flights, disrupted rail service, shut schools, prompted emergency declarations up and down the eastern seaboard, even as slashing winds cut off power to more than 70,000 homes and businesses. Electricity prices climbed. Listen, this is crazy, man. Electricity prices climbed 126% to 273.23 per megawatt hour Thursday morning, the highest for that time of day in 4 years. The gas squeeze underscores the lack of adequate pipeline capacity to haul enough gas from Appalachia and points further afield to the Northeast metropolitan's households that have been scraping heat oil tanks and gas-fired furnaces. As a result, the gas in the region is the world's priciest, commanding 14 times more than the UK future prices and 9 times more than the Asian imports of liquefied version of the fuel. This is like amazing, man. The market mayhem in and around New York is having a knockoff effect in regions far away from stormy weather. An Appalachian pipeline hub known as Dominican South, that is typically home to the cheapest American gas, jumped to $4.15, twice the 12-month average, and a huge premium of late October. With demand and price of gas being this high in New York and New England, everyone wants to flow gas into the region, but the current pipeline infrastructure cannot carry enough to even the market out. The thing that's amazing here, and this is what you want to wrap your head around, folks, is that I'm not quite sure whether I haven't traded natural gas in a long time, but I'm not quite sure I'd ever even trade it again when I'm looking at the aspect where I just finished reading that story as to the aspect of the futures going down versus going up. Because it's really hard to comprehend that you, if you try to buy it, you're paying 100 times more than it. But guess what? Natural gas in the future market's going down. I think you get easier markets, folks. Stay right there, folks. We'll be coming right back. Dow Industrials finished up 152. NASDAQ up 12. S&P's up 12.5. Coming right back.